The Economic Opportunity and Family Support Act of 2025 is here, and it's changing the financial landscape for millions of Americans. This law affects everything from your income taxes to social programs like food assistance and healthcare. Its aim? To simplify taxes for some, offer targeted relief for others, and overhaul the social safety net. These aren't minor tweaks. They're sweeping changes that will impact your paycheck, your family's budget, and your access to essential services. For many, new deductions and credits could mean more money in your pocket each month. But for others, stricter eligibility for social programs may mean losing benefits you've relied on. The impact depends on your income, family size, location, and job status. Our goal is to break down the most important parts of this law. No politics, just practical facts. We'll explain who benefits from bigger tax credits, who faces new work requirements, and how small business owners are affected. The key is to be informed, so you can make smart financial decisions. By the end, you'll know how this reform could affect you and your family. With this knowledge, you can adjust your budget, seek advice, or prepare for what's ahead. Taxes and benefits can be confusing, but understanding the basics makes it manageable. Let's start with the most direct change for most people. What happens to the money taken out of your paycheck? The new law isn't just about numbers, it's about your daily life. Whether you gain or lose, knowing the facts puts you in control. So let's dive in and see what's changing. Here's what you need to know about your income taxes. The first big change: income tax rates from 2017 are now permanent. That means no sudden tax hikes next year. Your federal tax brackets stay the same. The standard deduction is also going up for everyone single, married, or head of household. And it's now permanently tied to inflation, so it'll rise each year with the cost of living. This higher deduction means fewer people will need to itemize, making tax filing simpler. For most, just taking the standard deduction will save more money and time than tracking every expense. Imagine a couple who used to itemize now. The bigger standard deduction likely beats their total receipts. This change streamlines tax season for millions, letting you keep more of your income tax-free. The result? A simpler, more predictable tax process for the average household. You'll spend less time on paperwork and more time focusing on what matters. The new deduction structure is designed to keep up with the economy and with your life. Next, let's look at new credits and deductions that could put even more money back in your pocket. The child tax credit is getting a major boost, up to $2,500 per child under 17. More families qualify, and a bigger portion, $1,800 per child, is now refundable, meaning you could get a check even if you owe little or no tax. For a family with 2 kids, that's up to $1,000 more in your pocket. This is direct support for working families, especially those with modest incomes. There's also a new senior bonus deduction. If you're 67 or older, you get an extra $1,500 off your taxable income on top of existing senior deductions. This helps retirees on fixed incomes manage rising costs. For example, a 70-year-old living on Social Security can lower their tax bill and free up cash for essentials. These changes are about making tax relief more accessible, whether you're raising kids or living in retirement. The new credits and deductions are simple to claim and designed to make a real difference. For many, this means more money for savings, bills, or daily expenses. Next, let's see how the law helps workers and car buyers. Workers in tip jobs now get a break. A new deduction lets you subtract 20% of your reported tip income from your taxable income. For a server earning $25,000 in tips, that's $5,000 tax-free. Overtime workers also benefit. You can now deduct 15% of your overtime pay, rewarding those who put in extra hours. These targeted deductions mean more take-home pay for millions in hospitality, service, and hourly jobs. There's also a new incentive for buying American-made cars. If your new car is at least 75% US-made, you can deduct up to $1,500 in loan interest each year. This supports domestic manufacturing and gives buyers a financial boost. These changes are about rewarding hard work and supporting American jobs. Whether you're earning tips, working overtime, or buying a car, the new law puts more money back in your hands. It's targeted relief for those who need it most. Now let's talk about deductions for state taxes and small businesses. The state and local tax, SALT, deduction cap jumps from $10,000 to $25,000 for individuals and $50,000 for married couples. This is a big win for people in high-tax states, think New York, California, New Jersey, who can now deduct much more of what they pay in state and property taxes. For some families, that means thousands in extra deductions and real savings. Small business owners also get a boost. The Qualified Business Income (QBI) deduction is now permanent. Owners of pass-through businesses can keep deducting up to 20% of their business income, making long-term planning easier. There's a new safety net too. If your business nets under $75,000, you're guaranteed a $5,000 QBI deduction, even if 20% would be less. This helps new and struggling entrepreneurs keep more of their earnings. These changes make it easier to live in high-tax areas and run a small business. The law aims to support both established and up-and-coming business owners. It's about stability, predictability, and a fairer tax break for Main Street. Next, let's look at how the law helps you save for health, education, and disability needs. Saving for health, education, and disability expenses just got easier. Health Savings Account (HSA) contribution limits are up 25%, and you can now use HSA funds for things like gym memberships and nutrition counseling. 529 education savings plans are more flexible. You can use them for apprenticeships and professional certifications, not just college. This recognizes that career paths are diverse and education isn't one size fits all. ABLE accounts for people with disabilities now have double the annual contribution limit, letting families save more without risking vital benefits. These changes encourage proactive, long-term planning for big life expenses. Whether you're saving for medical bills, job training, or disability support, you have more options and bigger tax advantages. The law empowers families to build financial security for the future. It's about giving you the tools to prepare, not just react. With higher limits and broader uses, these accounts are more valuable than ever. Now let's see how the law changes food assistance. SNAP, or food stamps, is changing. Eligibility and benefits are now checked every 3 months instead of once or twice a year. This means benefits can adjust faster if your income drops, but it also means more paperwork and deadlines for families. Work requirements now apply up to age 59, so more adults must prove they're working or in training to keep benefits. SNAP funding is now capped and given to states as block grants, so if unemployment spikes, states may have to cut benefits or create waiting lists. These changes mean more red tape and uncertainty for families who rely on food assistance. The goal is to encourage work, but it could make life harder for those facing job or housing instability. If you depend on SNAP, staying organized and informed is more important than ever. Next, let's look at new Medicaid requirements. Medicaid now requires most non-disabled, non-elderly adults to document 80 hours a month of work, job search, education, or volunteering. Miss the mark or the paperwork and you could lose coverage, even if you're working unstable hours or lack childcare. State agencies must build new systems to track all this, which could lead to mistakes and eligible people losing coverage. The focus shifts from providing health care to enforcing requirements, raising concerns about access and public health. For many, the new tax law means savings and relief. But for those relying on SNAP or Medicaid, it could mean more hurdles and uncertainty. The impact is personal, so review your situation and seek advice if you need it. Understanding these changes is the first step to navigating your financial future.